Happy birthday to the
Oh. Oh. Yeah. Scoot away. Yeah.
Happy birthday to
His hair caught fire.
you.
Run! Run! Oh, well, that sucks. Ooh. Oh, my God. Yeah, that's how you fool people. Rock, paper, scissors? Ooh. Ooh.
Look at Bo. Look at Bo watching this whole side.
Oh, man. Oh. Dude. Oh, you lucky. Oh, not so lucky. Ooh. Oh, that's nice. All right. Well, everybody, welcome to the Blacksmith Podcast. Happy Saturday. Happy Savvy Saturdays. Financially savvy, that is. We are going to go ahead and get started. But before we do, two things. Answer this question. What do you do with your 62? Rather, what did you do with your 62 this week? Saturday is the day of accountability. What did your 62 look like? That is to say, what did you do when you were not eating, sleeping, commuting to and from work, aka your spare time? What did you do with it this week? Start putting it in the chat, put it in the comments when you see this on YouTube later. I want to know, what did you do with your spare time this week? We're going to hold each other accountable this week. And before we kick off everything, look at here. Look it, as people say, look it. We hit 150,000 views. Now, that's not on one video, which would be nice. That is all in all. And I would just want to say thank you for watching the Blacksmith Podcast and understanding that I am merely here trying to give back and help people out and bring attention to a lot of financial literacy, advice, talks, knowledge that the average person just doesn't have. So if I have helped raise your level of financial prowess, it's really all the things I need. But hit a like, share, subscribe on the video. Hit a what did I say? Hit a like for I got it. If I've raised the level of financial prowess, that's what I'm doing, right? And if you agree, hit a like, share, subscribe for TBP. That's what it was. I said that in the short, but I haven't used it since. I need to coin the term. So we hit 100,000, 150K views. All right. I haven't heard that yet, but let's keep it rolling. Now, remember, I'm doing chapters so that you guys can actually flip through here and see this. So we got a good show lined up for you. So the first thing we are going to cover is health is wealth. Health is wealth. So I asked AI here, Gemini, to give me the top 5 health tips of the week. And it did it for me. Protect your sleep like medicine. Prioritize 7 to 9 hours of uninterrupted rest by keeping screens completely out of the bedroom. Now, that is advice. Understand that if you see right over my my right shoulder, that's a TV. I do have a television in my bedroom. I do fall asleep to it a lot, sometimes. My wife and I typically will try to watch TV at the end of the night. Kids put to bed, we're going to bed, we sit in the TV, and we might watch 10, 20 minutes and drift away. Like Uncle Cracker says, give me the people as you free my soul. I actually have another TV against the wall over here. It's been screened against the wall for like probably since we moved in here. And it's been 4 years now. So Uh, we just, I mean, and no, every room doesn't have a TV. The kids don't have a TV in their room. The oldest two do. On the other side of that wall, the 15-year-old does. Down below, on the other side of the wall and down below her, the 19-year-old, he does. But it ain't even that big. It's actually a small, probably the size of my screens here, which y'all can totally see, right? About 19, 24 inch. I wouldn't say any bigger than that. But anyway, let's keep it moving. So I heard, okay, last thing, I heard the white light does interfere with you being able to sleep. I don't know the anyway, let's just keep it moving. Building consistent micro movements. Aim for a daily 15 to 20-minute walk to cut your risk of early death, or split it into brisk intervals to boost heart health. Basically, they're trying to tell you you need to get your heart rate up. Running, get your heart rate up, and then you'll hear people say, that's really what they should be saying, right? Then you'll hear people say, well, I'm not a runner. Well, you'll never be a runner unless you go out there and run. Well, I've tried before. You'll never be a runner unless you go out there and run. And a lot of us, we got to be honest with ourselves. We're eaters. Anybody is an eater. And so we can put a lot of effort into putting a burger in between our teeth, into eating our favorite foods. But when it comes to doing something we just really don't want to do, and if we're being honest, we just really don't want to do it. And so we don't, right? I see old men and women in my neighborhood doing the I got bad knees shuffle, and that's running for them. And they're out there every single morning. When I'm commuting to work, I'm leaving around 6 ish. Those people are out there and they're getting it, and they get out there before anybody else. They're up before 20-year-olds, right? At 5:30 in the morning, and they're doing the I got bad knees shuffle. Um, and they shuffle a mile, 2 miles. So they really want you to get your heart rate up. Now, if you really have bad knees or hips or something like that, and you can ride a bike, ride a physical bike. You could do that. Go get yourself a bike. It doesn't cost that much, but get that heart rate up. Okay. The next, see, that's what I said. That's what I said. Go for a run. So the marathoner, she's a 3-time marathoner, but she's done a ton of halves. She's done a ton of 15Ks and all that. She's got a ton of medals. Very impressive. And so that was her advice. So there's another health tip of the week. Go for a run, run a marathon. All right, so let's get through these. Hydrate with clear intention. So sip water consistently throughout the day to support digestive, natural energy levels, and metabolic function. I agree. I also subscribe to this. Now, I used to say I'm not a water drinker. Well, you're not going to, that's kind of stupid because your body's made of like 70% water. When I started to exercise on the daily, I started drinking more water. I noticed at the gym, I would consume a lot more water. I would do a set, my mouth would be dry, go get a sip of water, and that just turned into a routine. So then I started, well, my wife got me this, but this is a 40 ounce. It holds 40 ounces of fluid. This is not a 40 ounce. I take that back. This is water. This is agua. The best. Pinky out. So I try to finish one of these a day. I bring a shaker cup full of water, and this is only like 20 ounces. Water, liquid IV, so electrolytes and creatine are mixed into it. And then this is a protein shake. Anyway, so I subscribe to that. Prioritize functional whole foods, fiber. Okay, y'all know what you should be eating. Colorful plants, lean proteins to your meals while aggressively swapping out refined sugars. Notice they didn't say meats. There's a lot of people who argue veganism and all that kind of stuff. I'm not here for that. Meat has always been a part of people's diet since the beginning of time. And you got people living into their 80s, 90s. I don't care about the vegan thing. But notice it says sugars. Sugars is what's making people fat. Sugars is what's putting a lot more weight on you. It's an overage of calories, right? You get liquid calories through all that sugar, like those Starbucks drinks. Some of those drinks have 800 calories. Even 300 calories is a lot for a drink. That's crazy. That's a meal replacement. Um, but then it goes through you like water because it's liquid, and then you're hungry again. And the last one here is limit your digital consumption. Now, here's one we all need to do, and I already know it's going to be tough. So, what are we talking about? Reduce stress by setting firm boundaries on social media, news tracking, and shifting that focus towards real life relationships. I do agree with this. People put too much stock into social media. They have every platform known to man. Some people probably still have their MySpace. Get off of social media. God, what are you consuming? Is it that serious? And this is why people are socially awkward. They can't talk to you in real life, but they can get on social media and thug it out and say the craziest stuff to people. But if that person was in their face, they wouldn't say it. News tracking. People get so hyped and stressed and emotional over what the news tells them. And so these are your 5 health tips of the week. Write them down, take notes, remember these, screenshot it, and try to do these throughout the week. I don't just want to give you advice. Let's try and follow this throughout the week. All right, let's get to the chat. Thank you. Thank you. And now some soothing sounds. If you know, you know. Okay. Does crystallization of sugar in the eyes cause cataracts? Wow. So here's some health advice from Ramza himself. Ramza Bov, I think is how you say the last name. Yes, chronically high blood sugar can contribute to cataract formation over time, and diabetes. Excessive glucose in the lens of the eye can be converted into sorbitol in your orbital, which pulls in water and damages lens proteins, leading to clouding a cataract. Wow. So cataracts, if y'all didn't know, will cloud your eye and make it to where you can't see as well. All right. Let me read the rest of this here. So while it's not literally sugar crystals forming like rock candy, sugar-related chemical changes and protein damage in the lens are a real cause of cataract. All right, y'all reading it here. I want y'all to be cognizant of this because I'm telling you, health is wealth. Say what you want, but you may not realize it until you don't have your health anymore. But the people I see at the gym, there's an 83-year-old guy, there's an 85-year-old guy, 75-year-old guy. They all still go and lift weights, exercise, walk on the treadmill, ride the bike, and they can't do as much as a 20-something-year-old, but they will tell you health is wealth. Sorry, I wasn't saying nothing. I was shooting a quick text. All right, so people with diabetes tend to develop cataracts, so earlier in life, faster progression, more frequently than non-diabetics. All right, so there it is. All right, so we are going to move on. I had written a time, and I shouldn't have done that, but we're going to say 14:10. All right. So I'm doing chapters. Let me get the chat off the screen. I'm doing chapters so you guys and gals can actually flip right to it if you want to on YouTube. Just go into the description, hit more in the bottom right, and then you can actually flip right to the segment that you want to see. If you don't want to watch the whole show, or maybe you're just missing one segment of the show, this will help you, okay? All right, now moving on. The investment tip of the week actually comes from none other than TBP, he be me, the blacksmith. This is the investing tip of a lifetime. Forget of the year, of a lifetime. Forget of the week. Okay. I want you to put this in your front pocket, put it in the forefront of your brain. When you are looking at companies that you want to invest in, I want you to always follow this. This is not the tip of the week. This is one of the ones this is timeless, right? And I can guarantee you this. Put this some way in AI and say, if you follow this structure for Coca-Cola, for Pepsi, for Berkshire Hathaway, for any of these legacy companies, these American companies, watch the return it would give you over 100 years. So DCA always, dollar cost average always. So this advice I actually gave to somebody this week, because we were talking about the market movers, and I'm getting a segment ahead. But the market movers I have lined up, that's the next segment I have for y'all this week. RVI was on fire this week, and we can actually go look at it now because it's relevant to the advice. I'm getting ahead of myself with Ask Gemini, but RVI was on fire this week. So in the past week, it went up 13%. And in the past month, 112%, right? In the past month, you would have doubled your money. I don't know what that message was on my other screen. So in the past month, it has been on fire. So somebody asked me, well, they said in your short, because it was right about, when did I make that short? Maybe around $70, $60 maybe. And it's funny because somebody commented on that short and said this didn't age well, because from 50 something, I think when I made it, it blew up to 60 and 70 something dollars. So he goes, this didn't age well, because I said don't invest at the 52-week high. Well, it's back down to 53, buddy. What do you say? Did it age well? If you invested at that $56 or whatever it was, I think it was around $53. It hit the new 52-week high. If you invested there as it shot up $60, $70, and you can see it went above $70, how would you feel right now if you bought 100 shares? You feel sick, because you lose $20 per share, 15, $10 per share times 200. You would feel sick. That's why you never invest at the 52-week high, and that is why you never chase it when it's running away. Because it's gonna come. See what people do, and I'm gonna go ahead and I don't know what a hand clap is. There we go. I'm gonna go ahead and say that, because what people think is that this is a straight shot sprint. It's a 100-yard sprint, and if it gets away from you, you'll never catch it again. What it actually is an oval track. Yes, I gave myself a hand clap, sir. Somebody stop this guy. He's about to get started. Wow. So it's actually not a 100-yard sprint from end zone to end zone, and that's how people see it. You're thinking track and field, or you're thinking the NFL. It's not end zone to end zone, and it's touchdown and it's game over. It's not a sudden death match. No, what it is, it's more track. I said it's not track and field. It's more track and field, and it's an oval shaped track. You know, a track typically is once around is a 400, right? It's a 400. If you missed it, and think about it going up and down too, the topography of it. Think as you get halfway around, it's way up. But as you come back around to the start, it comes back down. It's a 400, and there's hills and valleys in between. But as you get back around to the start, here it goes, $53, right where it was before. So now you cannot say this didn't age well, or can you? You said it. So what do you think now, buddy? Here we go. Why invest? Not all IPOs are good investment at first, but the billionaires use it to sell as retail investors buy. So why invest? I love you, dog. That is exactly what I was going to get at. That is exactly what I was going to get at. So I will be 100% transparent with y'all. I was talking about Misty, MSTY. That was a miss. That was a miss on my part. I got overexcited about the amount of dividends it gave me. It gave me over $1,000 in dividends for the amount of shares I had the first 2 months I had it, maybe. But I lost so much equity. I actually lost 15K on Misty, which obviously it puts a dent in your portfolio. You never want to lose 15K, but it taught me a valuable lesson. So you can lose money, but as long as your brain stays intact, as long as you do the piccolo, my head wasn't damaged. I learned a valuable lesson. Do not become somebody else's rug pull. Why invest? That is what he's talking about. If you invest in most IPOs, I will say it again, most IPOs, if you invest in most IPOs, what happens is the accredited investors have already invested at pennies on a dollar. Like some of us got into Boxable at 80 cents per share, but it's supposed to IPO with FGMC as Boxable soon. I think July is the new IPO date, which we're going to talk about that too. I need to put that on the schedule. Boxable news. So when Boxable IPOs, it's supposed to IPO at $10. That's $9.20 per share. We plebeians, us common folk, the paupers, not the princes, this is like one of our first opportunities to do this, right? But this is what accredited investors have been doing for eons. They invest, and instead of having 1,000 shares, 1,200 shares, they have tens of thousands, hundreds of thousands. Let's say they could afford to buy 10,000 shares. Multiply 10,000 times 9.20, right? Let's just do that. Where's my calculator? So let's get 10 G's up here times $9.20. Look at that, 92 G's. You know what they'll do with that? As you start buying in, and this is what he's talking about, as a retail investor, that's the common folk, as y'all start buying in, you'll run that share price up to 15, 20 bucks, and then he will sell all his shares. So that 92,000 at $20 will double 184 grand, and he will sell all of his shares, take that money and use it on the next startup pre-IPO that's selling for 20, 80 cents, $1 per share, and he'll do it again. And that's how he multiplies his money, right? Now, all of his eggs aren't in one basket. He also invests in the market. He has a portfolio, but this is the money he's using solely for investing in pre-IPOs. That's how it works. So let's get back to what the segment is. It's all relevant to it, though. It's all relevant. So I can't keep using a lot of meat on the bone. People take that and run sideways, but there's a lot to this, right? It's not a piece of paper. It's an onion, and there are layers to it, right? Dollar cost always, save a stash for the crash. And I told somebody this about RVI. So let's look at RVI. So I knew Robinhood Ventures Fund I was going to be not a good idea, not a great idea, the most fantastic, phenomenal, life-changing. This was a life and generational change, right? With them getting with the SEC, the Securities and Exchange Commission, right? The ones that makes the rules on stock market, everything, right? And working out that we're going to create an index fund of pre-IPO companies, private equities or securities, they call stocks, right? To let the common man invest. That we were doing the earnings calls last year, and I told y'all this is going to be monumental. So how could I not invest in it? The only thing I regret, and I'm going to tell you, I do have a regret that it's only at 200. It should have been at 1,000 because I could have done it. And so, but I was focused on other stuff and let it take me away from this. So what did I do? I started dollar cost averaging. So I have a weekly buy of just $10. Think about that, right? $10 is $520 a year. That's enough to buy me 10 shares on average about. With 53.70, it's almost 10 shares for the whole year, right? Now, remember, this was down here at 20 something dollars. So 20 something dollars, $10 was getting me like a third of a share, right? A little over a third of a share. So dollar cost out always. I'm going to bring the dollar cost amount up probably when it sinks down more to $40. I might do $20 a week. But when it goes up and up and up, I'll leave it at 10 or maybe make it 15 or whatever. So dollar cost into this always is my advice. Into the Mag 7 always, AMD always, TSM always, but save a stash for a crash. So the 52-week high is now 77.39. My man said this didn't age well. I guess he's jumping the gun. He don't know. I'm TBP. That be me. So I do know what I'm talking about. So $77 is now the new 52-week high. So now that's the new 52-week high. If you take it at, don't be fooled. I'm about to teach you something here, right? Pay attention. Look at the steep climb. Do you see the steep climb? This happened in days. This didn't happen over the course of a month, over the course of a year. So should you really trust that 52-week average? I would not. I would trust the 52-week high being around here, 53.70. I would go off of where it kind of came back down to. I wouldn't trust that $77. And the reason I say that is because if you take, watch this. I can show you better than I can tell you. Let's say it's $77. I can't remember the cents. So multiply it by 0.2, 20% off is $15.40. Subtract that by 77. They're saying the law of the land, really the unwritten rule, but kind of, is 20% off the 52-week high. You can actually start investing in it. It's a good price. That would say 61.6 was a good price to start buying in. Let's do a different number. 77 times 0.3 is 23.1. Minus 77 is 53.9. So if you started investing at 60 something dollars and you dropped a couple thousand into it, guess what? You're down right now, right? If you did 30%, guess what? You're down right now. 30 cents per share, I think. It's 20 cents per share, right? Because that 52-week high got pushed in a matter of days, less than a week, I wouldn't trust that being the 52-week high. I think the news about OpenAI made people super excited. It spiked up and everybody, IPO jumped out. I think IPO, you have to wait 6 months. I'm not waiting 6 months. I'm keeping this forever. This is private companies we're talking about. So I'm keeping this forever. I'm not jumping off. So some people ask me, when are you going to sell or are you going to take profit? I'm not. I'm staying on. The billionaires, the millionaires, the old money would stay in this, right? But if they got a chance to invest in some of these companies, because they're probably invested in OpenAI itself privately. They're probably invested in the Aura itself. So this could have just been a money-making thing for them, a money-making venture. So anyway, that's 30%. You'd still be down 20% per share. So what I would say is go off of this 52-week high. But what do I know? Because the stuff didn't age well, says my man. All right, so take $10.78 off of what is it, 53.78, something like that. So $43, in my opinion, would be a good place to start buying it. If it can drop anywhere in the 30s, I would say load the boat. So I would say 30% from that value, because that's 70 something. Again, it happened in like 3 days. I would say load the boat in the 30s. So if you kept a stash, 3,000, 5,000, 10,000, if you plan to stay in this fund for 5 years at least, 5 to 10 years, that's your load the boat price for me, right? And it's just advice. You don't have to follow it. I'm not credentialed yet. All right, here we go. Why invest? What are we talking about? Okay, wait. Ramza's next. As long as it wasn't most of your portfolio in one shot, his 15K wasn't 50%. Put the camera on me. No, it wasn't 50% of my account. It was nowhere near that. He is right. The 15,000 I lost on Misty was not 50% of my portfolio. No, it was not. It was actually money I had to take it was money I had set aside to take a risk. And I took a risk, and it actually paid dividends, right? But I lost on the principal. Now, Why Invest said if you go to advanced charts, AMD, add the indicator, and EMA, it will show trend. Yeah. So, and I said AMD. I know I see what you meant. If you go to advanced charts and add the indicator, EMA, the estimated moving average, it will show the trend. Can you run the chart on that really quickly for the show, or is it too new to do that with? If you can do that, if you want to screenshot it, I'll show it up here. But I'm telling, do not trust that $77. Don't go off of that. So back to the advice: save a stash for the crash. Wait till a stock, if it can fall 30, 40% in a year, load the boat. That's a crash for that stock price. Dollar cost average always into the best companies that you believe in, right? And you want to invest in. Just don't put chunks of money in near the 52-week high. Okay, cool. Headed to SD. Okay, no problem. See you soon. I'm just playing. I don't even live in SD. So that's the investing tip of a lifetime, of the week. We're going to use it of the week. All right. Let's say 33 minutes here. All right. So now we are going to do some financial reactions. And Ramza gave me this one before the show. So I'm going to reload this one. Let's hear what he has to say. All right. I need the volume. Where the volume at? That wasn't grammatically correct. Am I going to have to unmute it again? I hate that. Hold on. Read the words.
If you're selling to
can you?
men, sell them what success looks like. If you're selling to women, sell them what success feels like. If you're selling to kids, sell their parents. If you're selling to parents, sell them on a break from their kids. If you try to sell to everyone the same way, you'll end up selling to no one. If you're selling to rich people, sell them time. If you're selling to students, sell them their dream. If you're selling to men, sell them what success looks like. If you're selling to women, sell them what success feels like. If you're selling to kids, sell their parents. If you're selling to parents, sell them on a break from their kids. If you try to sell to everyone the same way, you'll end up selling to no one.
All right, so that's not an investing tip of the week. That's a marketing tip of the week. It's actually a marketing tip of a lifetime. You could have used that marketing advice to anybody anywhere on planet Earth, and it would have worked. So it sounds like he is one of the very wise people that discovered that. I'm sure they discovered it a long time ago, back in the kingdom of Babylon, and they just didn't put it so eloquently, right? How do you sell bread to people? Well, you need people who are hungry, right? That works in any time on planet Earth. How do you sell cheesy bread to people? Well, you want to sell to people who are hungry but want to eat for taste versus just the nutrition to live, right? So maybe people with more money than because it's going to cost more than regular bread. So you go to the wealthier district. I've got cheesy bread. That's how you sell out of that. And when it's getting older, now you go and sell it the same cost as bread, regular bread to them, right? And they get a bonus. They'll buy it because it's got cheese in it, right? So whether you think that's moral or not, whatever, I'm not talking about that. I'm talking about marketing. Let's go through the video and break it down play by play.
If you're selling to rich people, sell them
Stop right there.
time.
If you're selling to rich people, sell them time. Time is the most valuable commodity, resource, thing that we have that we cannot control getting less or more of. No one wants to really get less time. They want to get more, and we have no control over it. It is the only thing. And time, I mean youth as well. And a lot of health is tied to youth, if you really think about it, because as you age, as that HGH starts to fall in us as human beings, starts to produce less, that's when the wrinkles in the forehead start coming. That's when the forehead starts growing every year. If you know, you know. That's when the beard hairs start getting white. This isn't gray. This will fall on the sink and disappear. That's when your shoulders the traps start touching your earlobes. No, I'm just kidding. That it doesn't work that way for everybody. I'm the blacksmith. So look, that's when a lot of health issues start popping up, because that's when toxins and carcinogens and things in your body have had a chance to have decades to do some damage or collect and be a force to be reckoned with, right? That's when your body starts to get weaker, right, over time. So but wealthy people figured out that time is money and health is wealth, and they put the two together and they said, I'm going to create positions at my company that will buy back my time. So if I created Wells Fargo, no, we can't use a bank because that's probably illegal. I know it is. If I created Amazon in my garage, if I'm Jeff Bezos and I created Amazon selling books online, so e-commerce, and I created it out of my garage, and now I'm in a huge building and it was just me, and now I have 10 times the amount of orders, I'll never see my wife. I'll never see my kids. I need an employee. I need two, because that's buying my time back. My time is valuable, way more valuable, and I have different things to run. So I need two employees to buy my time back, my freedom away from doing boxing and tracking orders and shipping and mailing and all of that. I need one to deal with shipments, and I need one to deal with packaging and tracking orders, buy, sales, and I'll have them both do returns. We got bigger. Now I need another employee strictly for returns. We got bigger. Now I need one for customer service. We got bigger. I need 3 more for customer service, buying, shipping. And so that's how you buy your time back. And I'm going to cut this segment really quickly to show you something, right? See, the blacksmith did something like this recently. I'm going to jump in and interrupt my own segment. How's that look? To bring you guys some news. So I used to ride a, what do you call it? A KLR 650 adventure bike. I may have shown it on here before. It is a, what do you call it? It's a dual sport. I'm going to show you right here. This is what I bought this on MLK Day. KLR 650 Adventure. I bought this on MLK this year on the 19th of January, and this is the one I had. It was blue like this. So it does everything good, does nothing great. So you see it has hips, as my wife calls it. It has two side bags, the trunk. It's a one cylinder dual sport. So you see the dirt wheels it has. It can go off road. It's heavy. Sits upright. You sit upright on it like this. Handlebars out front, and your feet are underneath you. You're not leaning forward like the sports bike. It goes off road, has great miles to the gallon, 50, 60 miles to the gallon, especially if you're 55 miles per hour or under. You could ride it on surface streets. It is street legal. Look at the mirrors. Look at as fog lights down here, reflect headlight right here, and turn signals, all that. No caution lights, no cruise control, nothing like that. At high speeds, it consumes oil. So what I did, I said, nah, that's no bueno, because I'm going to have to go to highway speeds a lot, right? So I traded it. So what I did, and let me see if it's saved. Now, y'all know I would never tell y'all to buy anything, a new vehicle. Wouldn't tell you. Let's see if can I download them all in one shot? Probably not. Bear with me here. This ain't AI, live and in person. Okay, this looks like it's a part of it. It is. All right. So that's what I have now. I can't. Oh, it's not on the screen. It's on my screen, but I'm acting like y'all can see it. Hold on. Okay, hold on. Live. What is it showing y'all? Yes, it is showing the correct thing. So this is what I have now. Can I do? The problem is I can't go I can't move to the next one. Let's see. Oh, okay. If I can just do this, then yeah, here we go. Well, y'all can see it here. This is what it looked. Oh, no, you can't. Hold on. Jesus. Okay. All right. Y'all see it? Okay, there we go. So this is what it looks like. Oh, there's my boy in the background. This is what it looks like when doves cry. No, I'm just kidding. So this is a Yamaha MT-07. It's an upright bike, and I got this Monday. Now, I'm going to tell y'all a story about how I got it. There we go. Thank God. It all closed everything up nicely, just like I wanted. So I'm going to tell y'all how I got this. Let me bring this guy back up. Actually, this would be a good time to utilize this. All right, so in shopping for bikes, it was actually not even me. Aaron is a guy I know at the gym. He's a personal trainer. He actually had another hard skill, so he's licensed. I could tell another story about that, but I'd be too far off the beaten path. So Aaron, he used to have a CDL and drive big rigs. So when I told him that I got a motorcycle, he was like, be careful out there and all that kind of stuff. And I told him I will be. It's the other people I need to worry about. He said, yeah, that's why I'm saying be careful. Thank you, Sanchez. Appreciate it. You know, you always get the 100. Ramza don't. Okay, let me give him the, yep, 100, and then ignore Ramza. All right, so when I told Aaron that it was an hour and 15 minutes from my house to work, it was an hour and 15 minutes from my house to work without traffic. He was like, oh my God, what is it like on the way home? Because I know you leave early in the morning. That's why I got up at 2:50, folks. And I got out of the house by 3:20, and I was at that gym at 4:30, 4:40, workout for 2 hours, shower change. I'm at work an hour early, and I'd rather be an hour early than to sit in that traffic doing nothing, I can get stuff done at work an hour early, being there an hour early. In fact, I can even set up my day to maybe leave an hour earlier because I got there an hour earlier because my time is precious. But just sitting in traffic going bumper to bumper because I wanted to be lazy and wake up at 5:30 or 6 o'clock, I'm not doing that. My time is worth something. So I told him that motorcycle got me home in an hour and 30. It was an hour and 40 something the first time. Oh, let me tell you how long I used to sit in traffic in a Tesla. If I drove something that I wasn't in the HOV lane, 2.5 hours like every day. When I was driving the Tesla and I can get an HOV, I could go an hour and 50 to about 2 hours and 30 minutes. If there was not a lot of traffic, I left at a good time, hour 50. On average, 2 hours, 2:15, and really bad, 2:30, right? When I told him it was an hour and 40 the first day because I wasn't really splitting lanes. Now, that's something that's just California. Put the camera on me. What am I doing? Hold on. Here we go. That's just California. You can split in between lanes, and you can do it at low speeds, thereby just going through all the traffic, get to the front, and then go highway speeds. That's the idea of it, because most bikes, when they made the law, were not, they were carbureted. So they can't sit still. There's no fan on the bike. There's no cooling system on the bike. So you didn't have a, what am I trying to say? It's in the front of your vehicle, head-on collision will break it. Your radiator. It doesn't have a radiator with radiator fluid, engine coolant. So the only way it cools itself is by moving forward. The wind cools it. So a lot of those motorcycles, when they made that rule, if they sat in bumper to bumper traffic, they would have to keep turning the motorcycle off, turning it back on, and inching up, turning it off, turning it back on. So anyway, so the first day I wasn't splitting lanes. I wasn't that bold. And so it took me an hour 40. The second day I did it and it took me an hour and a half. Then one day I got home in an hour and 15. I told him 59 minutes because there was no traffic. I was blitzing it this day. It was like 56 minutes and I looked up and I was almost in my neighborhood already. And I was like, whoa. And he looked at me with wide open eyes and he said, man, you bought your time back. And I never thought about it like that. See, different perspective. That's what the wealthy has learned. That's why you sell them time. That's why you sell them time. So I was going to put it on the whiteboard, but I just told y'all. So moving on.
If you're selling to students, sell them their dream.
All right. Why sell students their dreams? Because they're going to college. They're going to high school. They're going to college. Let's talk about college students. They're going to college in order to earn a degree so they can improve their earning potential so that they can buy the things that they have dreamed about owning. A house or a big house, a car or a fast car or expensive car, a woman. So the car, the house, the things, whatever it is, you sell them their dreams because that's what that's what they're dreaming of, right?
If you're selling to men, sell them what success looks like.
Sell them to what success looks like because it attracts women.
If you're selling to women, sell them what success feels like.
Sell them what it feels like because women think with feelings.
If you're selling to kids, sell their parents.
Now notice, he's not breaking down why women are wired differently than men, so you market to them differently. You don't get into the whole, I'm offended because you said what it feels like versus men, whatever. Look, you sell them. We are biologically a certain way for all the time in human history. This works. People lie, statistics don't. People get offended, statistics are stoic. They just are what they are. And he's saying do it because it's going to work. Do it differently and see how successful you are. I'll just say that.
If you're selling to parents, sell them on a break from their kid.
So he said if you're selling the kids, sell the parents. So that kid that's very famous, or he's probably an adult now for playing with Fisher Price toys and stuff like that. He sold the mom on the toy, right? They sold the mom on the toy. Oh, this would be nice for my kid. Ooh, let me record this. And so she recorded him playing with it. It got all these views. So she bought another one and did it again. And then ran that play, and he got wealthy. She got wealthy through he being wealthy, right? But you're exactly right. If you want the kid to have the toy, you sell it to the parents like this is the best thing ever, and the parents buy it. Birthdays, Christmas, just because. And the just because for parents with children is just because your kid asked. And then, yeah, if the parents have kids, so you sell them on a break from the kids, not because they don't love the kids, but because parents usually forget each other in the love and being together as husband and wife because they become parents all the time. So you sell them a break from the kids so they can reconnect. So, and they actually need that. Sometimes divorce will happen because of overload, arguments, fighting, and they come at each other rather than working with each other to take a break from the kid. They don't realize that.
If you try to sell to everyone the same way, you'll end up selling to no one.
And there it is. That's the end of it. That is well said. That was well said. I couldn't say it any better. All right. We'll stop there for that one. And I am going to take a break from that segment, and I'm going to pull, where's my email? Let me see. Here we go. So Boxable News. I said I would go over this. I think I said it last week that I would do it this week. So here we are. Discord, are y'all cool with me keeping the split screen down here and keeping the camera on me here? Because what I'm trying to do is make it for YouTube so that they can see a picture of me, a bigger picture and of the screen. Y'all tell me what's better for y'all. All right, so
Very nice words, but happens to be wrong. Wrong.
thank you, Sanchez. See, yeah, let's go in here and this guy. Oh, hey, he posted something. See the red line. Yeah, what does the red line mean? This is the moving average, and it says 50. And I see the red is 54.22. Is this about where you got to explain this, good sir? You can't just say, see this red line. I don't know what this means. I know this is the candlestick charts that traders look at. I know this is trading, not investing. However, I do know it can help investors. All right, I can see your comment through the photo. The EMA is on my Robinhood Legends, by the way. Say the whole thing. Robinhood Legends. Looks like this for Robinhood Ventures, Fund I, RVI. That's the red line. That's the EMA. So that's the moving average. What does this tell us, though? That's what I'm trying to ask you, good sir. So the moving average, this is saying a good price for it should be 53.70. No, that's what it's trading at now. What does this tell us? Change it to 9 EMA. Oh, here, why invest? Let's go, baby. Let's go. See, if y'all want to become traders, and I don't mean to the US of A, I mean in the stock market, why invest? And Ramza is actually learning a lot and very quickly. This is proof. And this guy has a wife, has 4 kids, has one of our brothers, our youngest brother lives with him, and they took in another young man so he wouldn't be homeless. He's probably about 20 years old, young 20s. So he's got a full house. He's got a full house. He's an IT by trade. He's a veteran. And he also is learning a new skill rapidly. So this is proof what you do with your 62 will determine your future. You can't complain if you ain't doing nothing but being lame. I was trying to make it rhyme. Bars. All right. Let's see the average price of an asset over time. So if I'm getting this right, that's saying the average price of this asset was 54.22. Yes. It's the 50-day moving average. So the red is telling me 54.22 over time. Yes, bam. So read it right. All right, so you know what that means? So if the average, the 50-day moving average of this, the EMA is 54.22, then right now Robinhood is trading underneath the 54.22. So that's saying, yes, you can start buying the asset now, which is why I said dollar cost average always. I wouldn't put 2 grand in it right now. Start with $10 a week, $20 a week if you can afford it, something like that, and start investing into it, because I think it's probably gonna come down a bit more. I'll let them talk in the chat. Let me get on to what I was going to. Oh, Boxable. Where is it at? Okay, so Boxable, they sent these emails out. They're excited to share a major milestone. So the merger between FGMC and Boxable has been declared effective by the SEC. Now, I received this email on the 14th. This brings Boxable one step closer to becoming a a publicly traded company through our proposed merger with FGMC. The special meeting of shareholders is scheduled for my birthday. That's my 40th. You heard it right, 40. If the merger is approved by shareholders, I will try to be in that audience. I did take leave like 3 days for my birthday. So, and I might not even be doing nothing real special. I'm not going to be working. I'll tell you that. I'll be working, but not air traffic control leadership. I'll tell you that. If the merger is approved by shareholders and all other customary closing conditions are satisfied, it better be. The merger is expected to close. Shares of Boxable are expected to become trading on NASDAQ shortly thereafter. So to my knowledge, Robinhood lists the New York Stock Exchange. I got to see, I may have to get another platform for NASDAQ. I don't know if Robinhood legally can have NYSE, New York Stock Exchange, and NASDAQ. This guy's crazy. Sanchez, he's off the ropes. Okay, so I might have to have another platform to trade this on the NASDAQ. This guy's crazy. So FGMC is now trading in public markets, investors. So basically, what is this saying? This is saying that June 9th is the day we'll find out when it's going to IPO, pretty much. If we're cleared for it to IPO, then they'll put out the IPO date later, right? Boxable is going to be trading on the NASDAQ, not the New York Stock Exchange. So I'll do that. NYSE versus NASDAQ. I'm sure it's up here already. Yep. Always look up when you're typing. If you don't know home row keys, type a little bit and look up, because somebody searched it already. It'll help you. So the New York Stock Exchange and the NASDAQ are two primary U.S. stock exchanges, differing primarily in how they operate, the companies they list, and their trading styles. So let's look. So market type: auction market is the New York Stock Exchange. Dealer market is the NASDAQ. So buyers and sellers compete directly in New York Stock Exchange. NASDAQ trades occur electronically via market makers. Trading location: Wall Street is where New York Stock Exchange is. That's in New York, New York. If y'all didn't know that, Manhattan. And the NASDAQ is 100% electronic, no physical trading floor. The vibe, whatever the hell whatever that means. I can't stand it when people use vibe, but whatever. Known for older blue chip legacy companies and stabilities, and NASDAQ is high tech, hyper growth biotech. So NASDAQ was always more technology, and New York Stock Exchange sell anything. Think about it. Coca-Cola is not a technology company. It's for soda. Pepsi's the same thing. but NASDAQ would have had Microsoft. The difference is New York Stock Exchange would have had Pepsi, Coke, and Microsoft. NASDAQ wouldn't have had Pepsi and Coke. They would have had Microsoft, a software technology company. So that's what it looks like in real life. All right, so cost list, higher fees often seen as a premium for Prestige, New York Stock Exchange, and lower listing and maintenance fees on the NASDAQ. And then price match. The designated market maker, DMM, helps stabilize stock volatility. And then NASDAQ, multiple competing market and makers facilitate trades. So they're the core differences. I'm not going to bother reading the rest, but back to the email. This is going to IPO as Boxable on NASDAQ. It will not be on New York Stock Exchange, at least at first. I'm sure they have to meet certain regulatory regulations to be listed on New York Stock Exchange. So maybe in the future it might be. FGMC today is already trading on the NASDAQ, is what it's saying. So if you go ahead and buy FGMC today, whenever Boxable IPOs, which if June 9th is good, they could probably IPO the company as early as July. So if you were to buy FGMC today, Monday, it will turn into Boxable when it IPOs, is what they're saying. And then so that's the biggest news about Boxable. I know we talked about that. And I know I told y'all what I got in for. I'm pretty sure I said it. So I took $6,400 out of my stock portfolio. You talk about the 15 grand that I lost in Misty, right? I talked about it. And my brother said it's not even 50% of his portfolio. He is right. I have money going in different directions, which is how you're supposed to do. It's your money. Make it work for you how you need it to. Split it up, right? So 6,400 times 0.8, 80 cents per share. No, I did that wrong. Hold on. What am I doing? So I took, what am I meaning to say? Did I do times or divided? I think I did times. 6,400 divided by 0.8. Oh man, what is happening here? Hold on. Okay, here we go. Divided by 0.8. Yes. So it bought me 8,000 shares, and those shares obviously are 80 cents per. So if it IPOs at $10, all I would do is $10 minus 0.8. That's $9.20 worth of equity, right? Because the 0.8 is what I spent on it. So the rest is equity or how much it grew. And this would be times 8,000 shares. Bam, 73K. Now you want to talk about losing 15K? Well, 6,400 will get me 73 and a half, right? Now, that's if it IPOs at $10. I think I saw an email or some news saying they're thinking more like $12. And I saw something say more July time frame. So if it does 12, even better. If it does 12, then that'd be 11.2. So 11.2 times 8,000. And what am I doing? Am I flexing? Yeah, a hater would probably, or somebody with the wrong perspective. Sometimes haters are not, they shouldn't all be lumped together. Haters are not, they're not all equal, right? Some haters are just people with the wrong perspective. And if they don't know me and they haven't been watching Financially Savvy Saturdays, then I'm going to get it. I'm going to get an acronym. We're going to do it. If they haven't been watching me long, they'll think, oh, what an unhumble flex or a humble flex, but they're being sarcastic. It's not a flex. It's showing you that with a little bit of money and a lot of wisdom and maybe a lot of help from somebody who knows what they're doing and a lot more vision than actual sight, you could be looking at 6,400 saying, I could pay the rest of my car off with this, or I could knock a dent in my house. I could at least pay 2 mortgage payments extra this year. I don't really know what to do with this. I could go blow it on PS 18 and, watching Fast and Furious 85 or some stupid, Versace or one of these designer brands. But that's having a little bit of vision and a lot of bit of sight. You're seeing it 80% for what it is and 20% for what you could lose it doing, right? Now, if you want more vision, investing is vision focused. So you need 80% vision and 20% sight. 6,400. Now let me go figure out how I can invest it and make it 73,000. So you spend more on the back end. You spend more planning on the back end for the 6,400 than you do looking at it's only 6,400. Sight tells you limitations. Vision says sky is the limitation. Is there a limit to the sky? Okay. The blacksmith. All right. So let's get in these comments because I think they're figuring some stuff out. Change it to 9 EMA, the average price of an asset over time. Oh, you're chasing him. He's chasing why invest in his infinite knowledge. I'll give you a 100 for that. I'll give you a fire emoji for that. I mean, you ain't getting no more. But he can get a 100. This guy is golden. All right, can you explain why? That's a 5-minute chart. Oh, I see. Okay. Day trades, they're talking to each other here. NASDAQ, dummy. As an investor, if you want to look at daily and weekly, what it should look at, I don't think Robinhood had it. Okay, so let's look at that. So 5405 is what I'm seeing here. So yeah, again, the average moving average was not $70. That's why you don't want to use that as your 52-week high, as in to say, go off of should I invest from that 70-something dollars. No, go off of $54. Yeah, mine is Robinhood. It didn't change the interval. Thank you. We get a bonus shares for hitting investment marks. Oh, you got bonus shares. Okay. 50, 200 EMA are used to support buy and sell signals long term. Boxable. If the market buys Q up at high IPO or pre-IPO, the price will go higher. We need to be ready to convert shares to public stock exchange the moment we're able. I'm buying the dip. Yeah, so here's the thing with Boxable. Like any IPO, I can almost guarantee you as soon as that sucker IPOs, people are going to start offloading. You have to understand, Boxable used crowdfunding. They used crowdfunding. They didn't use accredited investors. So they let the common man invest at 80 cents per share. That's a lot of people that probably only put $1,000 in and got their 1,200 shares. So let's do that. So with $1,000, you divide that by 0.8. So they got 1,250 shares. And then let's see, 920 times 1,250. So they just turned $1,000. They 11x their money to 11,500. Don't you think the common man, most of them are going to offload that investment at $10 a share? You know why they're going to do it? One, because they're going to be scared. What if it goes down? I have 11,500. What if it goes down? They're limiting the 11,500 to what it is now, not what it could go to potentially. They're limiting it to that, and they're going to pull it and probably do dumb stuff with it. The smart people, I'll say this, I'll still call you smart. The smart people will either leave it there or pull it and use it for another investment. The wise people We'll leave it there and buy more if it dips low. Wise people could also sell it and use it for a different investment. I would say smart and wise. Okay. I would say it'd be wise either way. You could sell this, put it all in the RVI when this could be your stash to save for the crash. And you can wait until Boxable dips low. But understand this, you'll never get lower than 80 cents per share. That's why I wasn't putting them in the wise category at first. Remember, this 11,500 is predicated on your average buying price being 80 cents per share. So even if it fell to $2 a share before it went up to 50 in 2 years or something, you were still up. That's what you have to remember. You're still up because you bought it for 80 cents on the dollar. If it's at $2, you have $1.20 of equity times $12.50. You're still up. You turned $1,000 into something higher. You won. The end. It's not going to dip below, and that's my opinion. That's my foresight. It's not dipping below 80 cents per share unless the business went out of business. All right, average price asset over time. I'm chasing him. Oh, we got that already. A lot of people have been waiting a long time as early as 2020. Yeah, so if I'd have known about this in 2020, believe me, I would have had a lot more than 8,000 shares. I did not know that. So thank you for that. So I guess the last thing to say about this is have vision, folks. So I look at RVI as Boxable. I think Boxable is going to be around for a long time because, again, if we look at what Boxable is, housing meets mass production. Why is that important? You see that? Why did they put that there? Housing meets mass production. I'll tell you why. Because they're filling a need. There was this cartoon. What was it? It wasn't a cartoon so much. It was animated. I think it was called Robots. Pixar maybe made it. Sky Blue Studios or Sky Blue Productions Entertainment, whatever it is. I know it was Sky Dance, Sky Blue, something like that. They made an animated cartoon probably back in 05, 06 called Robots. And I think that was the name. And there was this entrepreneur that was beloved by all. Animated movie. It had this guy in it. Yeah, it's called Robots. I was gonna say this. Robin Williams was Fender, the main character. This obviously was before he passed. Rest in peace. But the beloved entrepreneur in this movie that drove him to greatness. His name was Big Weld. Big Weld. WELD. Obviously, it's robot humor, so welding, right? Big Weld. Oh, there it is, right here. Mel Brooks. Mel Brooks played Big Weld. Wow, Mel Brooks is old now. He's the guy that made Robinhood, Men in Tights. Funny enough, if y'all ever seen any Mel Brooks movies, that's just one of them. But anyway, Big Weld told them basically the dream big. And so he did. I lost what I was going to say supply and demand, right? Big Weld used to say, see a need, fill a need. That was the staple phrase in this movie right here. See a need, fill a need. Now back to Boxable. Why does it matter that housing meets mass production? Because there is a need for affordable housing. So that makes it niche. The adjective in there makes it niche. There's a need for housing, sure. That's the overarching issue. There is a need in America and all over the world, actually, for affordable housing. Affordable housing, and affordable makes it niche. That means we're not looking at Beverly Hills, Malibu, Hollywood, Silicon Valley mansions. No, we're looking at affordable housing. And affordable housing could be as big as you need it to be. Affordable housing nowadays is going to be small. The average home is 416 to 520K, right? In America, right? But what is the average home? I think it's 3 bedrooms, 15 to 1700 square feet. If you can't afford 416, don't even worry about it. Can you afford 60K? I bet you could if you don't buy a BMW. 60K gets you a casita. Let's look at it. Oh, look at that. Turnkey property is ready to move in, is what it means. $895 a month. Can you afford that? And it's 2 bedrooms, studio, or 1 bedroom. Let's learn a little more. No. I just want to look at it. There's the studio, $895. There's the 1 bedroom. So they separate, and all that means is they separate the bedroom from the water closet, that is the bathroom right here, from your closet, which honestly I would have put the door right here to get you in from this side, but I didn't design it, so I can critique, but I can't say much or nothing. It looks like you have a window here, but you have a door here, so there's one way in, one way out, unless that's a door. And then you have the 2 bedroom. Look, folks, this is $1,300 a month. It's getting to the point where people are saying, screw it. I don't have no shame in buying as much house as I need. You see what I did there? I said they're getting to the point where they're changing their thinking, basically. This isn't living in a small apartment. You know the crazy thing? People are living in a small apartment, maybe 500 square feet, not much bigger than this, in New York City, and pay 4 times that much. Chew on that for a little bit. Chew on that. I'm serious too. 500 square feet and pay 4 times that much in New York City. Why wouldn't you buy one of these in Florida and live in Florida where it's cheaper? Or if New York City could allow, could you imagine? Everybody be fighting for this. Do you know what would happen if this was allowed to be built in New York City? This would become the most valuable. This would not be just $60,000. I think this would not be just $60,000. What would happen is if they could bid on it, they would bid this right on up. And the use case would be out of it because it's affordable housing, but this would become more valuable. You would have more demand for it, right? In a place like New York City, where you pay 4 times as much to live in that expensive area, oh, absolutely. This becomes that $895. Now they're looking vision, what I could do with the rest of my money if I only spent this on housing. So Boxable, this is what I'm saying. Boxable is going to be around forever. And don't just think they're not developing stronger homes and more climate friendly homes or can stand up to climate homes. And they tested these. He said, I did the earnings call for Boxable last year. And they were testing these in 2012 with the military in Guantanamo Bay. That's a tropical area. So if you think people aren't going to hit the point or hitting it right now where they are just waiting, where they say, forget it, I don't care. Give me a Boxable. I'll live there. And that'll be better than trying to argue and fight and scrap for one of these big houses. You're out of your mind. Yes, they absolutely are. So, and I tell you, I was hoping to find it because I think, let's look at the menu really quickly. See the products? So they have the casita where they fold out and fold up. They have the baby box. This is actually considered a mobile home because it has wheels on it and it can be moved. They can move this one too, but you need to have it professionally folded up and shipped out. Public sector, these are bigger and they can rack and stack. I don't know if you can rack and stack the casita. I can't remember. And in developments, they're going to build tiny home developments using Boxables. Boxable will be here, folks. So if you have sight, convert that to vision and you'll be all right. The blacksmith. Boxable is going to be here. And again, you'll never beat your initial investment of 80 cents per. So if you need more money for the stock market, I would say this is my advice. This is what I'm going to do. I'm going to leave the 73K in Boxable and let it run. Let it run. I'm going to let it run. And I'm going to start dollar cost averaging into it. Could you imagine it IPOs at $10, it shoots up to 15 in the first month and then falls off, goes down to $2, and you have a weekly investment at $10, $10, $10, $10, $10. Imagine that. That's all you need. Now, if it gets to 200, I'm going to be really pissed that I didn't buy more. If it gets to $2, I'm loading the boat. Don't even worry about it. I'm loading the boat. And I'll be covering earnings calls on these. The show's over, folks. That's really all I have for you. We were just ending on Boxable. But I appreciate those in Discord that's always rocking with me to the end. But I want to respect your time as well because I actually got a late start on the show. I was talking to my wife about some important stuff. She's going to college, and she was telling me what she was going to do. But I'm telling you, folks, this is a company I truly believe in, and it's just like RVI. So I actually did the segment of the show without kind of saying it. Market movers, I was supposed to do market movers, RVI and AMD, but we looked at RVI. We just didn't look at AMD. But this is the show I have for you this week. I got to go because I have to edit and get it up on YouTube. And I'll be back next week with more. Hey, I think this guy, he don't miss an opportunity. But hey, folks, I appreciate you for rocking with me. I think this was fantastic content. And if you agree, hit a like, share, subscribe for TBP. And we are out. The forge is going cold. Thank you and have a great week. Thank you. Much love, Sanchez. I appreciate it.